who have travel food services reporting their numbers. I looked at your numbers, Varun. Obviously, on a reported basis, there is a decline because of the deconsolidation of the business in the base. You adjust for that. There has been a decent amount of growth, closer to 9% on the top line and 15% on the bottom line. The question is that the first half, which had seen in the second quarter slowdown in some sort of traffic activity at airports, etc., how much does the first half account for your overall annual sales? The second half is understandably a lot stronger from a travel standpoint, right?
Completely. First of all, thanks for having me on the show. And almost giving me the tag of an anchor. That would be a superb thing to be there. But, it's great to be here and talking about our numbers. So we've gone through a period, I think, which was, for the first time, not seen often in the industry, a bit of slowdown that happened in terms of traffic. The momentum slowed because of, obviously, an external event that happened. Unfortunately, we had the geopolitical tensions about India-Pakistan in May, followed by June, the unfortunate air crash that happened with Air India. So that had an effect we saw in the quarter. And you actually had a passenger degrowth in some parts. But very strongly, I think, post that, from October as well, and some of that, we're seeing a clear trend of momentum coming back. So in our numbers as well, you can see, so our system-wide numbers is what we do overall. We did in this quarter about 730 crores of revenue. So that's about 18% growth. So in spite of a passenger weakness, I think the sector itself, there's so much momentum. And the way first half behaves for us, generally industry, is it's roughly about 45% of the annual revenue comes in there, 55% kind of back-ended in the second half.
And assuming that, this year, because of the impact of all these unforeseen circumstances, it would be about 35% as against the 45% that normally is. So would you cross the last year's revenue of 1,700 crores this year because you've done about 730 crores in the first year?
Right. So I think generally this year, yes, the first half has been weaker. The sense is that we're coming out of that, the way the momentum is. Obviously very early in the day, but I think the October and November indications are that is then. So probably it's potentially that 45, 55 could be slightly more skewed to the second half of the year. What we generally look at a bit is our system-wide numbers because, we operate partly our console numbers, but what we do get our profit from, which ultimately where it comes down is not only from a console, but we operate certain joint ventures, associates that give a significant contribution to our PAT. So from a system-wide basis, you can clearly see our numbers will actually exceed last year. And we're very, very confident of that and quite significantly.
So give us a sense, Navi Mumbai Airport, what's the opportunity there? H2, how much of that are you penciling in? Anything has been penciled in the guidance? And give us a sense, how you can scale it up.
Sure. And so generally we see, and maybe actually even wider than that, we've got, for example, 4 opportunities live with us right now. Right. So we've recently, Delhi Terminal 2, which recently reopened, we mobilized units there. We have done units at Cochin Airport, the domestic terminal. We're mobilizing a whole set of units over there. Plus, not only Navi Mumbai, Noida as well. So we have those coming up in the second half of the year, both of these greenfield airports. So quite significant. Obviously, new airports are part of our story. It's what we very well see an opportunity there. And I think in that, you will see probably it'll be back-ended, all these numbers in this financial year. But I think FY27, all 4 of these opportunities will be quite significant contributors further to that growth in FY27.
So fair to assume obviously system-wide, you would know a lot better, not the analysts. But, from a reported standpoint, over 2,000, 2,200 crores by FY27 in terms of a top line, would that be a fair estimate?
I think, if I could probably give indication. So I think from us, that's the console number there. From a system-wide, for example, we grew about 25% last year. So our system-wide revenue was about 730 crores this quarter. We did a bit over 1,400 for the first half.
First half of this.
And so therefore, you just extrapolated, potentially it'll be closer to the 3,000 mark for the year. So, those type of numbers, we grew FY25 to 24, 25%
right.
there.
So about 4,000, 4,200 by FY27 in a system-wide sales, because first half is 1,400. Obviously, it's about 30-40% of your overall sales. So this year, you understandably can do about 3,300 crores. And, you grow about 20% on that. So 4,000, 4,200 crore should not be out of reach, right?
Right. We take those growth rates and no reason we see, like I said, the effect of that traffic was probably short-term. No reason one doesn't see those momentum coming back as we very
Was there any impact on the lounge traffic because of the Dream Folks issue? Obviously, that does not impact your business directly, but the number of people that enter the lounge would have...
So, our numbers actually have maintained quite strong in that lounge piece. Obviously, we had, without coming to particular businesses, there was a transition where we have actually enabled an technology platform internally to give direct access, which actually to some degree has made the opportunity even more better because, you can provide direct access, you can customize experience for travelers. Someone's coming, wants X experience in part of the lounge. Another passenger, maybe a different part of the lounge. You can actually customized experiences if it's a direct.
So H1, can you break up, what will be the difference between the lounge as well as the QSR revenue?
Right.
H2, how does it look?
So for Q1, Q2, both had an equivalent impact because passenger traffic was a common denominator.
Right.
If you see, even when we did the IPO, we kind of gave that breakup in detail. So roughly about 50%, 48, 52 type of level. So it's very similar for us. That trend very much will continue, is our expectation. Even at the IPO, we had indicated when we did it a few quarters back, roughly CAGR is about 20% for lounge business, 18% for the travel QSR over the next 5 years was what was anticipated. So I think those will continue with passenger traffic coming back is what we expect, and over the next 5 years for sure.
Any other new contracts that are coming up for bidding or renegotiations?
So I think we have some opportunities actually, which the new ones are. So you have normally new terminals coming up. So Delhi Terminal 2, a prime example. So that's something we recently mobilized. We have additional units we're looking at in terms of even Delhi Terminal 3 is going through some expansion there. So we are seeing those. A new one opening next would be Cochin.
Okay.
So Cochin is the one mobilizing now in January of this year, and you'll see those units. Hopefully, if you fly there
And
soon.
outside India, last time when you joined us, you mentioned quite a few opportunities. How many are you looking at right now? And are margins much better there?
So we're seeing a very similar trend as India. It takes us about 18 months to mobilize a new market, probably a new country, maybe 24 months. You get our numbers to the way we see it purring normally.
Okay.
And we're seeing the same trend. So we've got Malaysia active for us. We've got Hong Kong active. We've actually set up new subsidiaries in the UAE and Indonesia as a new update. So we're looking at those two markets as well to further expand from in the regions.
All right, just a final question before we let you go. FY25, your margins were close to 33% with increased revenue. Obviously, operating leverage kicks in. The first half, your reported margins are close to around 38%. Increased passenger traffic in the second half, etc. as well. Where do you see margins stabilize for a business like yours?
Right. So we did you're right, and even on a PAT level, about 27% roughly was our PAT margins. With the benefit of, because we look at it, JVs and that coming in as well.
Yeah.
We've seen operating PAT margins probably the 20%, 22% is the levels plus the JV. So I think that level 25, 26% level is what, including those JV flows, we would target at a PAT level.
Take that point.
Thank you so much, Varun, for joining us in our studio, and we wish you all the best for a much better and stronger H2. We'll get you once again at the end of Q3.
Pleasure being here. Thank you.
Thank you so much. Well, we'll now slip into a short break. Up next, we will connect with Indrajit Agarwal, Senior Research Analyst, CLSA, and focus on the industrial materials. Stay tuned.